Vitale Wealth Management here with this week's Gradient Investments Market Update. All data is gathered as of the week, March 30th, 2026. Hope you're having a good week so far. This is Holy Week, so Easter is coming right around the corner. Good Friday this Friday. Last week of Lent. Hope everybody's ready. Let's get into the week in review. It was another challenging week for U.S. equity markets as ongoing geopolitical tensions in the Middle East weighed on investor sentiment. NASDAQ was down 3.22%, S&P 2.1%, and the Dow was down 0.9%. Both NASDAQ and Dow entered correction territory, which means falling more than 10% from their recent highs. International markets were mixed, with international developed equities posting a modest gain of 0.09%, while emerging markets were down 1.73%. With the first quarter of 2026 now behind us, market behavior closely resembled the volatility experienced in the first quarter of 2025, characterized by sharp swings. This year, geopolitical conflict in the Middle East has been the primary driver of uncertainty, whereas tariff-related concerns fueled volatility this same time last year, and a lot of you remember that. Despite different catalysts, both environments raised similar concerns around potential inflationary pressures and slowing economic growth. So looking ahead, the U.S. and most international markets will be closed on Friday in observance of Good Friday. We will not be here as well, so we'll be closed down as well. So we can spend time with our families, and we wish everybody a blessed Easter as well. Now let's get into the upcoming economic releases. This week's key economic reports will provide important insights on both labor market and the health of the consumer. So today, the JOLTS report, which is Job Opening and Labor Turnover Survey, will be released, offering a closer look at labor market dynamics. We got a strong rally going right now, so we'll see what happens once they release this. Wednesday, tomorrow, retail sales data will shed light on consumer sentiment health. Finally, on Friday, the monthly jobs and unemployment report will offer further insights into the health of the labor market. Last month, we got a little downturn on the labor force in jobs. And with everything else, with the pressures we're seeing the market react, so that's why we've been down. Market outlook: oil prices remain a key focus for investors as the ongoing conflict in the Middle East shows little sign of resolution, despite continued speculation around potential peace talks. Well, they said we're close to a deal, which is why the market's also been rallying a little bit. Recent surge in oil and natural gas has provided a meaningful tailwind for energy stocks, with the S&P 500 energy sector gaining more than 6% last week and up 13% since the beginning of March, making it the only sector to deliver positive performance over the period. Yet our energy is up this year, but it's very volatile. So while energy prices are high, have supported the sector, they have created headwinds for U.S. consumers. Many Americans are already feeling the impact at the pump, with an average gasoline price of $4 a gallon, up from $2.80 just the start of the year, which of course is putting pressure on inflation. Now, looking ahead, investor attention will shift to the labor market, with several key reports scheduled for release this week. We already talked about the JOLTS report happening today. On Friday, despite the markets being closed in observance of Good Friday, the monthly job and unemployment rate report will give us a better picture of what the labor market is doing and any signs of weakening in 2026. Well, as you know, with interest rates as high as they are, and they still haven't come down, we're only down a few times, that does put pressure on employment, and with the intention of softening the market. Talking about recent activity in the Gradient portfolio, there was trading activity in the absolute yield with the following changes. They sold MORT and they bought MLP1. Limited partnership. So there's different strategies in there. Stocks in the news: Chewy, which is owned in the small and mid cap portfolio. The pet supply retailer projects another year of sales growth and maintain expansion fueled by strong demand and cost savings efforts. Shares were up 10.72% for the week. That's pretty huge. AstraZeneca, which is owned in the G40 and the G50, reported favorable results from late stage clinical trials for experimental lung disease medicine. Shares are up 2.36% for the week. Again, our office will be closed on Good Friday, and that's all we have for today. So we want to thank you so much for being part of the Vitale Wealth family. We're thankful for you. If you have any questions, feel free to reach out, 855-756-5700. Visit us at vitalewealth.com. We want to wish all of you a happy, holy week, and a very happy and blessed Easter, and we'll see you again next week.